Hello all, this is Chad Stayskull, President of Eco Wealth Management with our Educational Economic Update for December 2016. Looking back on November, no one could argue that it was a boring month. After a long, exhausting presidential election, Election Day brought results that few people were expecting. Just that day, the New York Times had given Hillary Clinton an 85% likelihood of winning. Based on a number in both state and national polls, it was likely Hillary was going to win. We all know how the story actually played out. And what might even be more surprising than Donald Trump's victory is how the markets responded. Rather than experiencing the sell-offs that many experts predicted, the major indexes have shown tremendous growth since the election. These noteworthy positive market increases are just a few of the economic indicators we saw in November. In my last month's video, I talked about how the gross domestic product, or GDP, had its biggest gain in 2 years, showing the economy was growing more quickly than most economists had expected. Well, the government released its revised GDP numbers in November, and they revealed the economy grew even faster than previously thought. After years of sluggish growth, we're actually happy to see the economy picking up its pace once again. The employment picture is showing an equally positive outlook too. Unemployment remains low, and personal incomes grew again in October. If you look at this year's gains as an annual rate, incomes are up an average of 5%. These meaningful increases mean that Americans have more money in their pockets, which will likely increase their spending to match. Consumer spending is already up 4.2% over last year, and we're kind of anticipating it will continue to grow, thanks to greater personal incomes and low unemployment. Since consumer spending accounts for more than 2/3 of GDP, the combination of stronger employment, wages, and spending could help advance our economy even faster. We expect that rising income and consumer spending will result in a solid holiday shopping season, which will further help GDP growth. One place where Americans may feel a budget tightening is when they go to the gas station. You may experience higher gas prices in the coming months, but we don't anticipate crude oil will climb anywhere near the record highs of 2008, which were nearly 3 times more expensive than what markets are currently paying. As we look across the data for November and 2016 as a whole, we believe the economy is continuing to strengthen. All signs currently point to the Federal Reserve raising interest rates when it meets in December. Fortunately, the markets and economy seem poised to withstand moving back toward more historically normal interest rates. Between the Brexit, the US presidential election, and more, this year has again reminded us that no one can predict the future. But I'm happy to say that recent economic reports and market performance give us many reasons to be thankful. Well, that's it for this month's Educational Economic Update. Please remember though, if you've had any changes in your life that may affect your current plan, please feel free to call us at 541-330-0220 so we can discuss and make any necessary updates. We're happy to talk with you. Once again, this is Chad Stayskull with Eco Wealth Management signing off for the month of December 2016. Bye.